Recording this video on Sunday, the 1st of April 2018. Do hope you are doing well. So it has been over 2 months since I posted to the blog, and frankly I needed a little bit of a break. Everything's been nuts since the beginning of the year. I mean, the markets went nuts, the cryptocurrencies went nuts, the business here has kind of gone nuts. We had a major update on the indicators that we've been working on for the last 3 or 4 weeks that has kind of really sucked a lot of my time. And frankly, I think with the blog I created a rod for my own back. Every time I put out a video it would generate, dozens, almost 30, 40, 50 email responses that needed replies, questions, technical points, all that kind of stuff. And I haven't really found a happy medium. I love posting, doing the videos, posting to the blog and so on, but technically, I've made it a little bit too complicated for myself to do a video update with all the nice kind of screen shots, and the technical side just takes a lot longer than it used to and so on. So I've not found a happy medium where I feel as if I'm kind of contributing, but it's not sucking me away from, the real job of trading and keeping the indicators kind of fresh and up to date and doing all of that good stuff. Anyway, so I will kind of just slowly work on that, but it's about time I did something on the blog. So thought I would do a rip through of all the macro kind of charts and just show you kind of what I think's going on and where we are. Certainly we're in an interesting point. I think we're at an inflection point, and we're going to be jamming around the markets for a few weeks until we get resolution. And I'll show you on my charts why I'm kind of saying that. First of all, dollar index. So dollar index, this is the usual setup. Hope everybody remembers this is the system view of the world on a daily chart of @DX, which is the continuous contract of the dollar index on TradeStation. So system view, strength is shown in red, weakness is shown in white, and then the kind of more granular view where we can look at the momentum in terms of volume, and we can also look at the professionals and amateurs. Professionals painted in blue, amateurs painted in yellow. So obviously we had this huge decline in the dollar index, and I said this decline would not be over until we see at least exhaustion sell on the downside. So the market maxes out, remember, with maximum volume first. That's the first of our 5 steps in our 5-step setup. So exhaustion volume on the way up, and bearish divergence kind of sets in, and then we break into a downtrend, and now we have exhaustion volume on the downside and bullish divergence kind of come in. So we're at the early stages of trying to find this kind of bottom area for the dollar index and a rally in the dollar. And you can see that we've got the professionals kind of coming in at the lows here. They kind of get excited, kind of move it away, buy it on the dip here and race away a little bit, where there's the exhaustion sell bullish divergence signal kind of coming. So we're in the early stages of trying to find this bottom. We've still got a couple of cyclical turns to go through. We've broken through the cyclical support on the intermediate time frame. That's this line here. We've still got to go, resistance support on that, on the dollar index. So we'll have a little bit of a rally, and then we'll kind of fall back again and test. But this is the early stages of a change in trend in the dollar index. So that's the first thing. Now, the rotation indicator, which is free on the website, we've got this in terms of the assets, and we've also got it in terms of the currencies. So I'm going to take off, just disable better rotation on that, so we can just see of the other currencies which is doing best and which is doing worst. So the best currencies have been the euro, the rand, which interestingly in the last week has kind of popped up, and the British pound. So the Europeans are doing quite well here. The weakest has been the Aussie. We've also got down here the loonie, so here we go, Canadian dollar as well, kind of doing the weakest of all of those currencies, and I'll just show you those charts just quickly. So here's the Aussie dollar. I actually did post on Google Plus and kind of went around on Twitter and whatever about a week ago, and I said we were just doing a test back up on the Aussie and look for some weakness in it, and here it comes in. So we've had exhaustion buy and bearish divergence. We test back up, another exhaustion signal, and the reason why we've turned around is all the professionals up here. This is a U-turn. So the professionals taking profits up here, and then again quickly getting short. So 80, 81, kind of maxing out here, and then jamming it down. We had these amateur tests. Amateurs thinking, oh, it's going back up. No, they get wrong-footed, bang. We slam back down below supports and so on. So this is almost looking like a complex correction on the way up, where we have been, frankly, in the last year and a half, from 71 to 81, just been gradually moving back up. What normally happens is the market goes in one direction, maybe in a complex direction here, complex correction, where it's kind of swinging between these wide kind of support and resistance areas, and then it goes into a really nasty kind of trending move where everything happens instead of slowly and kind of not going very far very fast to going quite a long way quite quickly. So let's see, we've broken into weakness here. Oops. On this chart, you can see all the white bars. There's our low risk entry point comes in, and we had a confirmation of another break of support here. So I think the Aussie dollar is kind of the weakest going on here, along with the Canadian dollar, and they're starting to roll over and kind of go down. The euro is looking the strongest. So although we've had exhaustion by bearish divergence and pullback to end of trend patterns on the intermediate and the lowest time frame, all the bars are still showing red, kind of up here. So we've not had that first sign of weakness. So remember, we want to see the exhaustion volume first. We want to see the end of trend patterns next, which we're starting to see. Then we've got to see that first sign of weakness if we're rolling over to a downtrend, which will be a break of support. We've not had that yet. So anyway, it's going to take its time on the euro to do that, kind of testing this 125 kind of level up here. British pound, same kind of deal. We've had the exhaustion pattern, bearish divergence come in, the pullbacks to end of trends, but it's been a little choppier on the way up here. You can see a couple of areas of weakness that we bounced out of, but in general, this is kind of red bars and uptrends going on here. We've not broken into a proper downtrend yet, so on the pound and the euro, we've got to be looking for that over the coming weeks. Now, the interesting one for me is the Japanese yen, and the Japanese yen is really important in terms of the equities market because of the carry trade. So you can see here, really nice kind of pattern. Exhaustion, sell, bullish divergence comes in on the Japanese yen back at the beginning of 2017, and then we bat around support, resistance, support comes in. So this support level holds really nicely. We've done all the damage on the downside in terms of volume. We're just holding, then we break into an uptrend, and then above 90.91 here, bang bang, we start breaking 2 time frames into this uptrend, and we've had a little pullback to end of trend and exhaustion buy signals here. Now, this exhaustion buy kind of going on here to me looks like getting the move going. You can see it's accelerating us out of this congestion zone, getting the move going. Proper exhaustion patterns, if you look at the Aussie dollar here, they're happening at kind of new highs, kind of top of the chart. If we look at the euro, it's kind of top of the chart kind of going on here. When you see them there where they're kind of middle of the chart, where they're not making new highs, it's not really an exhaustion pattern like blowing off. It's almost like everybody jumping on board and getting this move going. So that's how I interpret this kind of exhaustion volume, getting this going, rather than a rollover in this move. We've got cyclical resistance to come on the highest time frame that'll print opposite this support at some time here. And the other thing that we have not seen at these highs is blue professional bars. The blue professional, the last ones that we saw were down here and we broke to the upside. So they were kind of getting ready, getting set under that previous high there, buying that little dip and getting the move going again. Kind of come back into that kind of a zone here. We're holding at this point. But because we've not seen the blue professional bars here or here or here, that suggests the professionals are not taking profits at this point. This is too early in the move. Now, so we could just fuss around and go nowhere. We've got that cyclical resistance to put in on the Japanese yen, but I think we're going to probably continue higher. That is not good for equities, because what that means is we've got the carry trade in play and a reversal of the carry trade. So people need to, if there's equity weakness, they'll be repatriating funds to Japan where they can borrow money cheaply, and the carry trade reverses, and it means the Japanese yen strengthens and as the equity market weakens. So that's an important chart I'm going to be looking at in the following kind of weeks is to see if the yen continues to strengthen, breaks above this 96 level. That will show, and if we get that with weakness on equities, that means that equities is not looking good, and we found a significant kind of area of resistance that we're going to fall off from. Frankly, we've traveled a long way on equities, so it's about time that we have a little bit more than just a 10% decline that we've had in the last couple of months. So that's one to watch. Now, commitment of traders, I still watch the commitment of traders charts. I don't do it on a regular basis or blog about it on a regular basis, and I've never released the code for the momentum patterns on commitment of traders. It uses exactly the same algorithm as I use on the it's using the better indicators, but it's not been released. Interestingly, it has shown in the dollar index here bullish divergence kind of patterns going. I mean, commitment of traders seems it's such an old indicator. It's been around since I suppose the 70s, and there's been so much work kind of done on it. And I come and go with being interested in it. But these these divergence patterns, here bullish divergence, bearish divergence, bullish divergence, bearish divergence, they can be really good. And here we've got on the dollar index, we've got a bullish divergence pattern coming on the weekly chart here. And interestingly, on the flip side, with the Aussie dollar, here was the bullish divergence patterns. There's bearish, bullish, bearish patterns. So Aussie dollar kind of weakening, and Canadian dollar as well, which has been another kind of really weak currency here. So we had bearish, bullish, bad signals here early, nice one, and bearish divergence pattern kind of come in here. So it's worth checking out the commitment of traders numbers from time to time. And I find the divergence patterns are the most interesting. So there we go. Dollar index. I think we're in a turn happening on the dollar index, but we still need to kind of press into that bottom and check it a couple of times before it's really going to get into a strong trend. Meanwhile, all the other currencies are starting to roll. The weakest, the Aussie and the Canadian, and then the strongest at the moment are the euro and the pound. And watch the Japanese yen. So there we go. That's currencies. Now, what about assets? We'll get to equities. Last chart. Going to keep you hanging on the E-mini on the last chart. Again, the rotation kind of stuff is really useful. Just going to switch this off, and we can see where the strongest and the weakest sectors are at the moment. And you can see the emerging equities is still up there. That's still been the strongest of the lot. Equities, this is US equities, kind of falling off, the weakest of the lot. So although emerging markets are still the strongest of the bunch, I think they're starting to roll over. That some are stronger than others, but I think in general that trade, I mean, it's been such a fantastic trade for the last year and a half that I think it's finally starting to roll over. Equities are starting to weaken. Watch out for gold. Gold looked like it was getting going, and I think we've had an important inflection point in precious metals, gold, silver, platinum. I'll show you that chart shortly. And real estate, I'll show you that chart as well. Here's the emerging markets chart here. And it's been such a good trade over the last, what is it? It's almost two and a half years. So this was the bottom made in 2016, exhaustion, sold, bullish divergence, and then we break into this uptrend. We fuss around with an initial break here. This was the beginning of 2017. This is when the emerging market equities trade really took off to the upside. Beautiful. Everything kind of comes together. Support on the highest time frame. We're breaking 2 time frames, the low and intermediate. Bang, bang, bang. Red bars all the way up. This is exhaustion volume getting us going out of that kind of congestion move, and then this is the blow-off move that we've just had. So first sign of, so it's a 5-step setup. The exhaustion volume bearish divergence comes in. That's step number 1. A lot of selling going on here. That's we get an exhaustion step kind of going on here. We get pullback to end of trends. We've had an early one on the lowest time frame. Intermediate time frame comes in here. That's step number 2. Step number 3 is the first sign of weakness. There we go. So we start breaking supports. And then step number 4 is the low risk entry point. Bang, there it was, breaking back up to 50 on this index. That's the low risk entry point. And then confirmation when we get another break of a support level. This will be the real break. That'll be a break of support of the 2 time frames, low and intermediate at 46 here. But I think the emerging markets, I mean, it has been such a a good trade. I think it's just its time has come that we're going to roll over for a little bit and kind of chop around. Some bits of it are still doing a weakening faster than others. Here's India. That's a big kind of component of the EM index. And you can see here this is breaking in. Oops. Breaking into weakness here with 2 time frames being broken, confirmed downtrend after that kind of similar pattern that we saw to the index chart kind of going on there. And one of the strongest ones has been China. MCHI has been China. So here we've got exhaustion buys, pullback to end of trends on the low and intermediate time frames, but it's still red bars, no change in trend yet. And we're so far above support on the highest time frame, we'll probably need to put in pullback to end of trend on the highest time frame there as well. So it's just starting to roll, I think. I mean, it could chop around, it could maybe test the highs and so on, but you know, the guts of this thing has kind of gone. And you know, that whole emerging markets trade has been pretty fantastic. It's almost a doubling from the lows down here, down at 28.30. We got up to 52, so it's been a good trade. So, you know, rather than trying to max out that trade and find a little bit more in it and so on, it's like, where's the next one in terms of the rotation and so on? Where should we be looking next? Well, one of the areas we should not be looking is gold, precious metals, gold, silver, platinum. And you see the gold bugs, they're pretty down and out right now because you know, it's been hard going for them. But then when they start saying, "Oh, it's time for the breakout," it's time, I mean, they say it so frequently and so on. One day they'll be right, but I just don't think it's right now, and this is why. Because of these blue professional bars. You can see them at this blow-off move here, blue professional bars into that high. We come back down. The amateurs get wrong-footed here with a Rambo pattern. We ramp all the way back up. So that's the poor old amateurs just, you know, giving up at that point and getting out. And no, they kind of managed to ramp it all the way back up. Blue professional bars up here and so on. So with an exhaustion pattern, bearish divergence, they're taking profits at this point. Test back up. It's a weak test, bearish divergence here. We roll over again. And now we've got on gold, you know, we've got resistance on the highest time frame. We've got this weakness kind of come in. We've had a low risk entry point, another kind of confirmation going on here. It's been a choppy move up since 2017. Bang, bang, bang on the way up. And I just think it's starting to roll over at that point. Now, gold is showing that weakness there. Silver, a little bit of a mucky chart because this is showing strength here and it's not strong. It's just we had a false breakout here above 17 and it flipped us into a bit of an uptrend, but you can see since then it's just been problems on the way down. And again, if you zero in on where the professionals have been active, they definitely did buy it up at 1550 here, tested back down, but all these blue professional bars coming at 1750 taking profits, and then they quickly got out. And I always say watch for the highs and lows of these big blue professional bars. We tested back into that zone, test, and we just can't get back into it, and so we're starting to roll over. So on that chart, it's still showing weakness at this point, but you know, we're so close to a couple of supports here on 16 and 1570 here. We break those supports, all of a sudden that's just going to roll over into a nasty looking chart with white bars and kind of downtrend. Platinum don't show all that often, but it's part of the complex, it's part of the precious metals. But here we go, exhaustion buying, bearish divergence, resistance on these highest time frame, and we've broken into downtrends, white bars kind of going on here. So I think that whole complex of precious metals is kind of on the way down. And of course, you know, if the US dollar is going up, that just naturally kind of puts pressure on gold, silver, platinum, so that precious metal kind of complex. All right, the other one that's not doing too well is copper. And copper, we had a great trade here. You can see that we set off from this congestion zone at $2.20, and the exhaustion buy is kind of getting us going. But then we've maxed out with all these pullback to end of trends, whole family of them, low, intermediate, highest time frame, with exhaustion buying, bearish divergence. We've had our signs of weakness. There's our low risk entry point at 320, and then, you know, confirmed downtrend, double breaks going on here of supports on 2 time frames, and so it's not looking good for copper. Copper, Dr. Copper they call it, should turn this one off. is, you know, it goes up when there is global strength in the global economy, and it weakens when there is weakness in the global economy, because it's, you know, one of the most widely used industrial metals. If there's demand for copper, that's because we're building stuff, because the economy is globally kind of doing well. So if copper's kind of weakening, that's not good for the global economy. What else? Crude. Well, I think crude's, I don't know. I've had so much trouble with crude because of this pattern here. Look at all these flush patterns going on here. I think it's more helpful to look at crude on the weekly chart with the better indicators, and that gives us a better view of what's going on. So we maxed out. Do you remember when we were up at the 200s? Bang, exhaustion buy, and then it just crashed the other way. Remind you of a chart? Cryptos? Anyway. So on the downside, bang, 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 we just had this waterfall decline. We stuck in this zone, and then all of a sudden went from the hundreds down to the 30s and 40s, kind of down here. Exhaustion, sell, pull back to end of trend on the intermediate time frame, flush pattern going on here, and this exhaustion buy. Again, an exhaustion buy pattern, kind of mid-chart. That's almost like getting the thing going rather than a blow-off move, like a blow-off move to the downside here. So, and then on this chart, you know, this weakness that we've had, we've come back up to the top of that blue professional bar, not played with the lows again. So I think we're potentially kind of breaking out in crude. But as I said, I've had a real trouble with this. Yeah, I was on board the crude move for this early piece. When was I into it? Must have been here. Into this 2017. I thought this was the breakaway move, and then we came back down to test again into this kind of all these supports kind of going on here. But the thing that's tricked me out of this is all of these flush patterns, because you know, if this had generated exhaustion sell on the downside, I'd be happy, and these patterns wouldn't show. They'd flicked around, wouldn't be there, because it's because of this. On better momentum in the calculation, that reading was so high, and we didn't have a corresponding kind of pattern on the downside with a similar type volume in order to flip us the other way. So I've been kind of tricked out of a long crude move because of these patterns just not being correctly aligned for me because of that momentum pattern. Anyway, so we're looking like we're going to break into something on crude. Now, crude kind of breaking up, yeah, it's potentially an inflation type trade, but it's also, you know, problems in the Middle East. So I wonder if something's going to happen there, that people are worried about that. So crude's looking interesting. Now, rotation into assets. Look at this one again. If you're looking for a trade, because this has kind of done it for the time being, at least emerging equities. Equities, I think, is kind of looking kind of iffy and just trying to find a high, testing and so on. But if you want to jump on board something that I think is looking interesting, I'm certainly looking at, is short real estate. And there's actually an ETF where you can short real estate's DRV, which is looking kind of interesting. So you can see here, now this is more like it. Exhaustion sell on the downside, support in the highest time frame. We break away into a nice uptrending move. That's exhaustion buying, getting the move going. And we definitely had some profit taking by professionals up here at 15. You know, the moves run from sub 10 to 15. That's been a really nice little trade for the beginning of this year. Whoa. Cancel, that's my trade station backup just coming in. But we found a little bit of resistance here at 15 and the blue professional bar kind of come in. This is an area to watch. If we break back up above this blue professional bar at 14, then this thing could be really interesting for a break to the upside as a short real estate. You know, it could go places on there. So and it's a 3x bear move, so it could travel. Anyway, I've not jumped in yet, just because that didn't look right. All those blue professional bars at the highs. We've had this kind of one kind of come in here. But if they're using that opportunity to kind of pick it up on the way down, we'll break back above the highs of that blue professional bar, and that'll look interesting on the upside. Lastly, I have no idea how long this video has run, but it's probably pretty long. So let's just talk about equities and the E-mini long-term pattern. So we finally got an exhaustion buy pattern here with this move. So we had exhaustion sell. This exhaustion buy was getting us going, breaking us out above all of these resistance lines, bang, bang, bang. And then so we've had a corresponding exhaustion buy, kind of taking profit at the high. And that was at the beginning of the year. There we go, beginning end of January. We came back up, put in a bearish divergence pattern, pull back to end of trend. Now, what I'm going to show you here is that we're just going to zero in on beta sine wave 2, which gives us all of the time frames. I mean, this thing looks mucky, so I apologize for that. And I don't normally show it on a chart because it's too much information, but it's just showing the cyclical crosses on beta sine wave, the 3 different time frames. The one that zigs around most is the lowest time frame with the narrow, thin little lines. So that support's kind of come in here. What I want to show you is this. We've got a cross about to happen on the intermediate time frame there. You can see that red and blue line starting to cross there. That'll give us support on the intermediate time frame, which will mean we'll have a support on the low and intermediate kind of come in at this 2600 level, 2585 type level. That makes that incredibly important. That will give a pullback in an uptrend support on the intermediate time frame that potentially, gives us pullback to end of trend on that intermediate time frame that we go put in a test back up to the highs. However, if it breaks, that'll be a break of 2 support levels very close together, the intermediate and the lowest time frame at that 2600 or just below it kind of level. So if they break over the next week, that's bad news. That means we'll all of a sudden have put in first sign of weakness on the downside, and that could be it for a while for equities, and we'll start to kind of roll over. My best guess is that maybe we're just going to go for a choppy kind of season for a couple of weeks where we put in that pullback to end of trend. But let's see. Let's not count our chickens. It's the 2600 level, 2585 that'll be really important, and that level will print in the next day or two, I would suggest. So there we go. I hope that video has not run way too long. I have the feeling that it's at least 30 minutes, so I apologize for that. But it's been 2 months or so I had a lot to say. Anyway, I do hope your trading is going well, and if you're a subscriber to the Better Indicators, look for a major update to the indicators. There are quite a few kind of changes that have been in the works for a while, and we finally got around to getting those out. So look for that in the next week.